My name is Grace Hardy and I'm the CEO of Hardy Accounting. But before that, I was an apprentice. And when I was an apprentice, I remember the first paycheck I got, it was the most amount of money I'd ever earned in my entire life. And many young professionals were in the same position I was. 9 times out of 10, you just want to spend it on something flashy. So, coming from an accountant, here are 5 common mistakes young professionals make that you should avoid. It's so tempting to upgrade everything as soon as you start making more money, whether that be a new watch, a new apartment, or a new car. This is known as lifestyle inflation. The problem? Well, if you keep increasing your spending every time your income increases, you're left off no better financially. It also means you miss the opportunity to build wealth. When you're earning money from such a young age, it is such a privileged position to be in. So use that opportunity to start building wealth for the long term. You should save a percentage of each payslip, potentially 30 to 50% depending on your circumstances. You can set this up as a standing order into a savings account or an investment. Also, avoid taking out finance for luxury purchases. If you can't afford it, then do not buy it. Stick to a budget that reflects your goals, not just your income. So if you want to save for traveling or putting down house deposit, then reflect this in your monthly budget. Mistake number 2 is ignoring retirement planning, however boring it may sound. Retirement might feel like years away. Compound interest works best when you start early. In the UK, most employees are enrolled into a workplace pension. But too many young people opt out of these not knowing what they are. For a workplace pension, your employer contributes at least 3% if you pay in 5%. Plus, it's tax relief. That's free money. Many employers offer above minimum contributions, especially if you contribute more. So it's always best to check your benefits with your company. So make sure to stay enrolled in your workplace pension, potentially look at increasing your contributions by 1 to 2%. Because for every percent your employer matches, that's free money for the future. Mistake number 3 is poor emergency fund management. Life likes to throw curveballs at you all of the time. And if you're not prepared, it will wreck your finances. In the UK, with high rents, rising bills, and things tending to go wrong, it's important to have saved up an emergency fund. Because without a buffer, people turn to overdrafts and credit cards, often with high fees. These may seem like lifelines, but they can create a dangerous debt cycle, especially things like buy now and pay later. Here's what you should do instead. Build 3 to 6 months worth of essential expenses in an easy access savings account. Consider using a cash ISA for tax-free interest, just to make sure you've got enough money aside if something is to go wrong. Mistake number 4 is skipping out on budgeting. Budgeting isn't about saying no to fun. It's about knowing what you can say yes to, confidently. Too many people have no idea where their money goes on a monthly basis, and they're shocked when their account hits 0 before the next payday. So here's what to do. You can try the 50-30-20 rule for budgeting. 50% on essentials like rent and bills, 30% on wants like gym subscriptions and restaurants, and 20% to savings and any debt repayments you may have. Also, review your direct debits and your subscriptions because you'll be surprised what you're still paying for. Mistake number 5 is credit card misuse. Credit cards can build credit or break it. Using them for day-to-day spending and paying the minimum each month racks up interest fast. That £20 delivery may end up costing you 30 quid or more once they've added interest on top of it. The average credit card APR is 20 to 30%. Falling behind can hurt your credit score, affecting your ability to get a mortgage, rent, or even some jobs. So what you need to do is, if you do have a credit card, set up a direct debit on a monthly basis to pay off your credit card at the end of every month. Only spend what you can pay off and use cards for rewards or cashback, not because you're short on cash. Avoiding these 5 mistakes doesn't mean you'll have a boring life. It means building a stable financial foundation. Because the sooner you get smarter with money, the more freedom you'll have. Like, subscribe, and share this with someone who's just started their first job.